So quick one, guys. Welcome to today's video. So we'll be talking about mastering one trading strategy and sticking to it, right? A lot of problem most of us traders we have. One of the biggest problem we have is jumping from one strategy to another strategy anytime maybe you hit a loss, or that particular week, say it's a bad trading week for you. You now tend to jump from one strategy to another, and or you tend to mix up different strategies while picking while looking for a trade, right? You tend to combine different strategies together while looking for a trade, instead of just what consistently mastering one particular technique, right? You master it and you repeat it all over and over again, right? There's something called the power of focus and repetition in SMC, right? Most of this strategy or the technique we are training, it is based on what repetitions, right? It has happened several times in the past, and we want to master it so that if it comes up again in the present, we'll be able to now trade it. Okay. Lots of people will ask, do smart money concepts work in all market? It works in all market, whether you're trading crypto, you're trading forex, you're trading indices, synthetic currency pairs, whatever, commodities, whatever you're trading, right? The concept works because the concept is just based on how the smart money, right? How the market makers moves money, right? So the concept is based on liquidity, and it is what fuels price movement either up or down, right? Any market you want to go to, if you go to gold, right? If you go to gold commodity now, would be able to see SMC setups everywhere, liquidity to take, liquidity to target setups, and opportunities. Just look at this now. Looking at this trade now, all right. If you've been following my teachings, you're able to just see something just from far. Look at this. Look at this imbalance. How price came back, right, into this imbalance right here. This opportunity for a trade to catch a continuation. Look at the same thing here. This one just happened currently, right? Same thing here. Look at this imbalance. Pick up price for a continuation. You see that it happens over and over again. So you've seen it here happening. You saw it here happening. If it's right, if it's to play out again, something like this comes up again, you would want to go ahead and take that trade. Look at this one, right? Look at this imbalance here. Look at how market came right into the 50% of this imbalance and bought all the way. Repetitions. We've seen it one time, we saw it two times, we saw it three times. No, now you know something is working. What do you now need to do? How do you now master the game, right? How would you now master the strategy? How would you now work on your technique, refine it, right? Get an edge towards it. It just involves discipline and much of study, right? Most of you now want to mix it with different other things. You want to start drawing, looking for patterns, chart patterns, head and shoulder, this and that, this and that. No, right? If it's SMC you're trading for, you know the basics. What we look for is what market structure. Very important to us, right? After market structure, we always look out for areas where liquidity is resting, money, right? And in terms of this money, we look for what internal, external liquidities, right? Liquidity to take, liquidity to target. But all these things must go along with the structure. If not, we'll be seeing sell setups when we are supposed to be seeing buy setups, and we'll be seeing buy setups when we are supposed to be seeing sell setups, right? Now, understanding market structure, understanding liquidity, then know how to pick entries, right? We've taught how to use the 4 hours time frame, which is our analysis time frame, to do our analysis. We've taught you guys how to use higher time frames for confluences, like using trend lines to discover directional bias. Of course, when you study market structure, the next thing is, okay, which direction should I go and be looking for setups? in. That's why we look for directional bias using trend lines and key levels, right? We discussed that on our past videos. Then you target liquidity. If I'm going to take an entry from this region, it should be, the point of interest should be closest to a liquidity region where liquidity is resting. If I'm going to exit off a trade, I should exit the trade when the market wants to go and take out liquidity on another level. Take and target, just how beautiful this particular setup plays out here, right? Doesn't matter how long it took. If you look at this, right, market actually took a long time. When it came right into this imbalance midpoint, it bought, structure shifted right here, right, with this impulsive candle that took out these bearish moves, right, this bearish trend line. It took it out with this impulsive candle. You had entered this imbalance, price pull, breakout, right? Confirmation entry traders would take their trade right here for a continuation, and they will ride it along because this is also an imbalance. Liquidity to take and liquidity to target, just resting at these highs, right? So if you can master, if you can see that you are looking at this, that this thing works, why won't you stick to this particular thing and trade it always? And anytime you do not see it, it means you do not have a particular trade. Say for example, someone who took a trade off this region. Right now I'm teaching you guys how to master one technique and stick with it, right? And just be doing the repetition. Anytime it happens, you trade it the same way. Anytime it happens, you trade it the same way. For instance, someone enters a trade off this level, right? Say you took a trade off this level of the midpoint of this imbalance, right? The midpoint right here. It would even be like a sniper entry. If target this, it's be like a sniper entry, right? You took it off this region. And what happened? You are targeting, of course, liquidity to take. This is internal range liquidity in form of an imbalance, right? This is external range liquidity in form of the swing high, recent swing high it created before coming down. We have discussed this, right? You see moves like this, market makes something like this, swing high, comes back down to the internal range and take the liquidity resting above that swing high, right? Now this is even gold, right? So it plays out. We have seen setups on on crypto, on Ethereum, on BTC, on several crypto pairs. If you're trading forex, the same thing. If you want to start trading forex, is the same thing. No much thing to add. If you're looking at it technically, the same thing, the same setup, right? So say you took the trade of this region. Of course, you want to target this external range liquidity right here. This alone, you can see it's just my kind of trade. 1:4. Beautiful. You are out. You're out of this trade. 1:4. Right? You can see the market tapped into here, broke out, then just took out that high. Now, say you're a confirmation trader, you're waiting for this trend line to break before you enter. This would have been another confirmation or another entry for someone, right? Same thing that happened here, right? You can see markets just came to the midpoint of that gap and you have a buy setup right there. So this would have been a continuation trade for you to catch a beautiful 1:3 on this continuation trade, right? If you have done high time frame analysis, you might want to target to take profit maybe at this supply zone, right? And you can see there was a kind of resistance. The market tapped into the supply zone, there was kind of a pull down a little bit, but because the structure wants to go bullish, you can see gold just kept buying on this region. But you can see this would have given you beautiful trade on repetition, nothing else, on repetition. And just the same way you saw this impulsive move here, you took off a trade from it. You saw this impulsive move here, you took off a trade from it. Now as market is moving like this, then you saw another aggressive impulsive move and market coming back, right? Market coming back off into it, then you have a beautiful trade again. Same thing is happening here, giving you another setup 3 times. So this is how you backtest a particular strategy on different pairs, and it gives you confidence that, oh, if this thing is playing out like this, it means anytime I take a trade using the same method, it's going to play out, right? Even though it does not play out 100% of the time, you can't get it 100% of the time, but at least let it play out. You can see it. Same thing, these are 3 entry setups, 3 methods of continuation that happened. Here we had a shift, a continuation, same setup. A continuation here again, same setup. Then what else do you look for? All you just need to do is to now master this particular pattern. If you, anytime you see it, you have a trade. Anytime you do not see it, you do not have a trade, right? It's as easy as that. Okay, this is how we stay. Not that, okay, you're looking for internal liquidities, you're looking for structure shifts, then before you know you're trading chart patterns, before you know you are trading different other, you're using different other strategy, you're just confusing everything together. You get confused, right? You get confused. Why don't you stick to one particular strategy and master it, right? If you decide to learn SMC, keep other strategies aside and focus on SMC. If there's no SMC setup, then you don't have a particular trade, right? No matter how you are in a hurry to catch a trade, at that particular point now, you do not have a trade. You stay out of the market till a setup appears. For example, someone who has taken off this trade now, has gotten this 1:4, don't have another setup. It means there's no price action. There's no more price action on this chart for you to catch any other setup. All you just need to do is to wait it out. You sit it out and let there be more price action, or you go to another pair to analyze. As long as this chart is concerned on this particular range, no other price action. You have taken your trade and market has eaten take profit. You're out of the trade. You wait few days for market to create more price action. You don't have to be in a hurry every day to catch a trade. You want to catch a trade weekends, you want to catch the Mondays to Friday. No. Few trades per week, right? This is how you build an edge to master a particular strategy. And anytime you go to a chart, say for example, you are mastering SMC and you want to trade the SMC setup, and you just go and pick a particular pair, right? Before you just enter any trade, any new trade or any new setup, you want to go and backtest. Just what we have done here is just like a backtesting, right? We backtest internal to external, and we saw 3 moves that the market made recently based on internal to external liquidity, internal to external liquidity, internal to external liquidity, as the market is moving in an uptrend, right? So for any kind of SMC setup you're looking to catch, you would go and backtest that thing on the pair and see how market has been playing out, right? You can see another imbalance where market raised here, same thing happened here. Gold is buying from this particular imbalance. So this is a form of like a back test from internal to external. Again, we have seen it happen here. This is very clear, right? This is a form of back testing, and you go to different time frames. For example, we are in the analysis time frame, right? We are seeing this setup. You can go to 1 hour time frame, you still be seeing different kind of setup that you back test. Once you've back tested and you are now satisfied that, oh, this guy is repeating these same setups, it means this setup I'm used to seeing in the market, I've perfected or I'm trying to master, is appearing on this chart. It means I can now go ahead and be taking off trades anytime I see it, because it works differently in different pairs, right? So if you now observe that, okay, gold always do this imbalance, buys off for imbalance, targets external liquidity both on buy side and sell side, it means if you see it happen anytime, you can now have the confidence and go ahead to trade it, right? That's how you master a particular technique. That's how you stick to trading one technique instead of what beating around the bush, jumping from one strategy to another, wanting to learn new strategies and looking for new strategy to learn. No, the power here is on repetition, is on focus and repetition, and refining that technique to what best works for you. Okay, and how would you be able to do that? You must be able to study and backtest your charts. Lock in, study, backtest, so that your eyes can now be able to see it anytime you trade. It's as simple as that. So that'll be all for today, guys, right? So I encourage you all to master one technique, right? If you're following me on through this SMC journey, it means you want to stick true to SMC and let SMC setups or confluences be what you want to see that will determine your bias on the charts. Thank you so much.